Hi, everyone. Today, let's talk about the updates to the SVB situation. Then we'll talk about First Republic. Then we'll go over HSBC buying the UK arm of SVB. And then we'll talk about how all of this is affecting the markets, specifically talking about the Fed futures and the potential upcoming FOMC meeting. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the situation is definitely heating up if the president of the United States is coming out and saying things. And basically, he said very similar things to what Janet Yellen and Jerome Powell said. He said no losses will be borne by the taxpayer. Money paid into the FDIC insurance will be used to backstop the individuals that hold money at the bank. He said he expects all of the management of the bank to be fired due to their poor performance. He also said that investors in these banks will lose their money. That's how capitalism works. And then a big thing here is he highlighted that Congress is going to look into the regulations surrounding banks to make sure that failures like this don't happen again. This could have long-lasting impacts on the banking industry, so that'll be interesting to see in the upcoming months and maybe even years. Moving over to First Republic, they dropped 60% here today, and this is despite getting $70 billion in liquidity from the Fed and JP Morgan, and this is before using the new Fed lending facility. Basically, they're saying we got lots of money on hand and we don't think that we're going to go bankrupt, but investors seem to think differently. They highlight the fact that Silicon Valley Bank as well as Signature Republic have been backstopped by the federal government already. Multiple other companies have declined huge numbers, like PacWest Bank dropping 32%, Western Alliance dropping more than 50%, Zion Bancorp dropping 19%, even Bank of America going down 3%. Pretty interesting. And it seems like this might just be a bit of contagion here. It does seem like First Republic does have enough cash on hand, especially with the injections from the Fed and JP Morgan. But who knows? This seems to be the next shoe to drop if we get another one. And then we have HSBC buying the UK arm of Silicon Valley Bank for £1 per share or $1.21. Just to reiterate, this is the UK arm of SVB, which is basically a completely separate entity from the US bank. And HSBC is a European bank as well. They've got some pretty interesting backgrounds and have struggled over the years, but apparently they have enough money to do this deal, and it seems like they should make at least a little bit of money on it. They came out and said this strengthens our commercial banking industry and enhances our ability to serve innovative, fast-growing firms. In terms of balance sheet, SVB UK had about $5.5 billion of loans and $6.7 billion in deposits, with a full-year profit of $88 million. And HSBC expects to make $1.4 billion in total equity after the acquisition. HSBC did decline 4.1% after the announcement, but it does seem like this is going to be a fairly good deal for both entities. And finishing up here with the Fed futures, it does say that now the most probable case is that we get a pause in March. This is the first time we've seen such a high number here, and it does seem likely given the circumstances. You can see previously we were expecting 50 basis points at one point, and then it went to 25, and now the most likely case is a pause. Looking at May, however, it's still just about 50-50 between a pause and a 25 basis point hike. And then you can see there is still a 10% chance that we do get a rate cut. They're also highlighting a 23% chance of a rate cut in March. I don't think that that's going to happen. And obviously that'll be dependent on CPI or PPI. If those come in hot, then the Fed's going to be kind of stuck at 4.75. And then looking at June here, the most likely case is that we at least get one rate hike, if not two, by June. So keep in mind, we might get a pause in March, might give markets a little bit of room. Definitely should give banks a little bit of room to readjust their balance sheets. But then we should assume that the rate hikes are going to continue in May and June. Let me know down in the comment section what you think the Fed is going to do. Are there going to be more banks that go under? And how much money are they going to have to put out to prop up these institutions? Is the Fed going to do a pause or 25 basis points in March? And what happens if CPI comes in hot, but we have banks going under? It's all a little bit complicated, but definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.